Brickell probably has the least amount of saturation.
I remember in 2015, I said, if you are an owner right now, get the hell out of this market, sell. If you're an investor and you have a property rented, get out because inventory is going to balloon.
There is a new condo law, which instead of 40 years, now if you're coastal, and they're fighting against that, now it's every 25 years.
Everything, all of this stuff is very, very expensive. My name is David Siddons. This is Shakira Sanchez, the urban core expert for the David Siddons Group. And for the next 10 minutes, we are going to discuss what the market is doing. And if you are an owner in Brickell, downtown, or Edgewater, if 2023 is the right year for you to sell your condo. Shakira, I'm going to start off by just looking at the overview of what you provided in terms of your data. You're very data-driven, as the rest of the David Siddons Group are. Rents seem to be coming down, carry costs seem to be going up, inventory seems to be on the rise, and sales as a result therefore seem to be starting to slow down. That's the quick overview. Tell me a little bit more. Let's get a little bit more specific, and who are we talking to and who needs to be really paying attention to this 10-minute segment?
Sure. So I think we're really coming at the perfect time because this is like the inflection point. So right now is the best time because we're not seeing inventory go extremely high, but they are rising, especially compared to last year or even the year before. So it's still somewhat normal levels of inventory. It has increased. Brickell probably has the least amount of saturation. Edgewater and then downtown has the most. Obviously, this affects the resale market. This affects the amount of rental listings. And, we are seeing prices fluctuate a bit. I think demand is still strong, but, buyer beware, renter beware as well.
Okay. So basically, be aware. Who should be aware most? Obviously, you said that, you're starting to see these inventory levels grow. Give us a few statistics, a few specifics into this. Obviously, we'll flash it up on the screen. I'm noticing months of inventory, which is our telling tale sign for how much product we have. That is let's call it the litmus test. That is your measuring yardstick to figure out whether or not the market's going to be going up or down or staying neutral. Inventory growing in the $1 to $3 million mark.
Yeah, that is probably the least strong bracket out of all of them.
You can say weakest, it's okay.
Yeah.
Yeah, there's no offense here. Weakest of the markets,
yes.
$1 to $3 million, which
Correct.
Is what, 2 bedrooms?
Mostly 2 bedrooms, yeah.
Okay. And that when we say weak, let's be specific, we're talking about 14 again, your statistics, 14 months of inventory in Brickell. That's a 269% increase year on year from 2022.
Right.
Edgewater, you're talking 12 months, a little better in Edgewater, the 3 million to 5 million, 11 months. And then the downtown area, 57 months.
Yeah.
57 months of inventory on the 3 to 5 million range. That's 375. I'm seeing hundreds of percentages of increases. Flash it up on the screen and you'll see. You shouldn't ignore that.
No, and like I said, I think that right now we're still seeing resale prices still somewhat strong. I mean, they've gone up a bit, which is important to note. But in reality, this is where things start to change. At this point last year, things were going all right until the following month, which is when we started seeing, the hawkish rates and everything kind of go, and take a very quick turn. And I think that right now people are very bullish on Miami. I think that'll still remain strong, but I think they're going to proceed with caution because not only are interest rates up and almost twice as expensive, but insurance has also gone up. The maintenance in most of the buildings, this is a big conversation we're having. So knowing to buy based on value, which should also reflect very much in the rental rates, this is important to note because you don't want to buy into a generic building or a building filled with too many investors because that's where it gets really bad.
Yeah.
And
just as it did before, 2015, right. A lot of people got unstuck. This isn't our first rodeo. I mean, we've been doing this since 2008. I wrote the Investor's Guide to Brickell and Downtown in 2012, flash that up on the screen. And then after that, we followed it through to 15. There was a group of people right now. I remember in 2015, I said, if you are an owner right now, get the hell out of this market, sell. If you're an investor and you have a property rented, get out because inventory is going to balloon. Prices are going to come down.
Right.
That was then. This is 2023.
Yeah.
Who would you say the same thing to right now in 2023? And which price point, which buildings? And if you're watching this and this is you, like we're talking to you, this is my price point, this is my building, you got to give us a call. We'll give you more detail. No
Yeah.
blind faith required, just good analytics.
Yeah.
Who are we talking to?
So somewhat the same people, but it's not about getting out of Brickell. It's about getting out of your building in Brickell. Because
Example of buildings. Give me some something I can get my teeth into.
Icon, as
Okay.
we know, all three towers, not just the Condo Hotel. All three of them are already seeing, and this is funny because we did an analysis between a building that's mostly primary secondary, which is Carbonell, just a good example, versus Icon Tower 3. The amount of rental listings in Carbonell were about 7, and the amount of resale listings were about 15.
Okay.
Icon Tower 2 had 36 rental listings and almost 29 resale listings. So twice the amount of resale listings and almost 5 times the amount of rental listings. So that's just the behavior in those types of buildings. So it's not about leaving Brickell, because Brickell is a very strong market, and I think we're seeing, and we will continue to see the best years ahead of the market, but it's about getting into a solid building, because a lot of the new construction projects that are in the pipeline, the 1-bedroom in Cipriani is, I mean, it's much larger. It's almost the size of 2 bedrooms in Brickell Heights, just to give you an example, which is another building that's still, I mean, great location, obviously has all of the amenities, but it's naturally filled with a little bit more of an investor class than in primary, secondary homeowner.
Brickell Heights, 1010, Bond, SLS Lux. These are buildings before that. In 2015, I warned people about saying if you have something generic that's mass-produced and replicated, 700 square foot, 1-bedroom unit, 11 or 1,200 square foot, 2-bedroom unit, you're going to get nailed for this, absolutely nailed. And guess what? They got absolutely nailed. I warned them. It was very, very easy to see. This can happen all over again, because as soon as investor class lose confidence, they're out the door.
Yep.
It's just money's on a spreadsheet. So this happens when obviously inventory starts to go up. And most importantly, as we mentioned, go back to the beginning of the conversation, rent's starting to come down. If the returns aren't there, and then add on to that, the carrying costs go up, then this is no longer a good investment.
Right.
And the sooner that the mass herd feels this, then sheep get slaughtered.
Yeah.
And if you are out there with the herd, running around with the herd, guess what happens? You're going straight into the sheep dip, and then you're going to get electrocuted. It's not going to be pretty. Sorry, but sometimes I'll sugarcoat it, sometimes I won't. I think it's important not to. The numbers are there, people. Look at the sheets, look at the numbers, pay attention to it. Not enough people study this. I wish they did.
Yeah.
Great for us, because we do. So we feel like we're the exception, not the rule. But on top of this, there's something else underway, which is the older buildings, the 25-year plus buildings. Give us some of the examples of those who are coming to that, as you said, 25-year assessment.
Right. So now that there's a new condo law, which instead of 40 years, now if you're coastal and they're fighting against that, now it's every 25 years and then 10 years after that. So there's a number of these buildings that are already either getting very close to 25 or already have exceeded that age. And that is probably the most expensive project that a building could undergo. And if you don't have the reserves, which is another big conversation right now as well, that will be a special assessment, or you'll see a massive increase in your maintenance, which is something else that you have to bring into. And now, with inflation, with everything, I think that's something that a lot of people are really taking into consideration. Santa Maria is a good example. Bristol Tower is a good example. We have a number of these buildings, the 3 Tecuesta buildings, they're all relatively there. Mm-hmm. So it's something to keep in mind, because 1, you don't want to really pay for that. 2, it's a very big, long process. You have to deal with your balcony being shut, months at a time. Certain parts of the building won't be usable. So if there's someone that's thinking about selling, you have to kind of keep this in mind, because it's a lot harder to sell a unit in that phase with an assessment, with the project, than it's
Absolutely. And I think that with a lot of the demographic in a lot of these buildings are people who are more primary residents, which is unusual because Brickell is mostly rental market. But if you end up waiting, and obviously these assessments come through and these costs come through, and they are coming, and you start getting your pool closed and your terraces closed, and then you decide to put on your unit on the market with everybody else, you do not want to be doing that. You do not want to be waiting to see which way the wind blows, because we know which way it's going to blow. It's going to blow in the direction of these things need to be addressed. Rebar, resupporting of the car parks underneath,
plumbing, everything.
Like everything, all of this stuff, it's very, very expensive. And it's not giving a visual change to the project. It's not like people are walking in and saying, wow, look at this beautiful new lobby. Look at this great new gym.
Right.
Look at this. No, this is structural stuff. That is just, it's just a occurring cost. A lot of owners, retired people who live, older demographic, who live in the south side of Brickell, are going to have a hard time digesting, swallowing this number. Although they might be able to pay it, they might just as well look to exit out to something that isn't going to have such a high carry cost.
For sure. And you have a lot of these people that have fixed incomes. So they've already taken one wave, which is an increase in the maintenance. And regardless if the building today is young or not, I've seen an increase in almost every single building, some more than others. But imagine if you're already dealing with that, then next year, I'm sure it's also going to happen because they have to satisfy the reserves. And then you have a looming milestone inspection. There's a reason why they call it a milestone, because it is a lot. And it's important. I completely agree with you, but it is something to keep in mind because now is that short window of an opportunity. And regardless if it's an investor-owned or a primary, this is going to affect them both, maybe one more than the other. But it is something to just keep in mind, and hopefully you could get in there with time, not at the end when everyone else is trying to jump ship, I guess.
So to summarize, the guys in the 1 to 3 market,
yes,
all across the board, that's showing the highest amount of inventory. Generic product, stuff that's the 1 to 2 bedrooms that may see the rental numbers coming down by, 7-8% this year. And again, on that statistics, that could double. That could happen again next year as the economy, the macro economy, is not having the most wonderful time. Let's put it like this. So companies are not expecting to suddenly boom up and start paying people more salaries with a stressed economy. So you could see a little drop again. And again, you double that, 7. Okay, we're nearly 15%. Added cost. So 1 to 3, the generic product, the older product that's coming up for the 25-year assessments. This is what you've got to really pay attention to. If you live in these types of buildings, give us a call. Additionally, the good news is a lot of this product went up a lot in the last couple of years.
It did.
So if you bought in 2019, 2018, even 2020, you made a lot of money. Don't just flush that away. Don't let that recede backwards because, again, the economic cycles are called cycles for the reason. They have ups, they have downs. That's why we flash up these, economic cycles and these wave patterns all the time, so you can understand there is a time to get in, there's a time to get out.
Right.
Leaving it finally, just getting into, what we're seeing, and again, this is really the investor class, the end users. End users are being satisfied with a new product coming into the market.
Definitely.
3 to 4 bedrooms. That is... Well, the last time we had great luxury product was Four Seasons, 2006.
Right, which is still very strong.
Still
today.
very, very strong.
Yeah.
Lack of product in the 3 to 4 range. That's why maybe the 3 to 5 range, we don't see as much inventory increases because that's where the 3 and 4 bedrooms sit.
Yeah. And like I said, I think that the window of opportunity is, although interest rates are higher, still inventory is limited, relatively speaking. Prices have still gone up. If we compare this quarter versus last year's quarter, prices still went up across the board on average, maybe 12 to 13%.
Yeah.
So that's still pretty good with interest rates, with a slightly slower market. And I would talk to that same end user and say, okay, well, if the inspection isn't enough, the interest rates, then I would say, well, think about what's coming in the next couple of years because, I'm really excited to welcome all of these new projects and beautiful buildings, but with that comes, a whole new class of inventory that Brickell hasn't seen yet.
Yeah.
So, which is good in the long run, but will still affect them. So there's multiple things and multiple variables you could look at to see if you're thinking about selling, you should really factor in all of this and then make, a better decision about it. And
look, I personally would rather take two bedroom units that are worth, $1.5 to $2 million each, and have a large unit at St. Regis on the Water or a large unit at 1428 because I know that I just swapped 2 Toyotas for a Ferrari. So better off. As always, if you want better information, you want to make better decisions, you call the David Siddons Group. Shakira Sanchez, the Brickell downtown and Edgewater expert. There's a lot to cover. There's a lot of other blogs, a lot of other articles, a lot of other data that we put out there. So if you want to know about new construction, if you want to hear about movements within the other markets, here's your expert. Thank you for watching. And as always, stay tuned for another David Siddons Group educational video.